Good morning, traders. It's 8 a.m. Chicago time, 9 Eastern on Monday, the 5th of December, 2016. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is a live stream, as you've probably noticed. The purpose of this stream is to provide a baseline for those who wish to listen um, for how I'm approaching the market every day. Those who've been here a while probably noticed that the process is pretty much boring and duplicated on a day-to-day basis, and that's how it needs to be, at least for me. And then the purpose is to look at the overall market setup and conditions, and to come up with at least a couple of plans for the day to trade against. Okay. Let's take a look at what's happened overnight. Some big news out of Europe. The first one is the Austrian presidential election, which was between a center-left candidate and a far-right candidate. There's a very strong populist movement, of course. We saw it here in the U.S. with Donald Trump. We saw it with Brexit, and there was also an opportunity for that in Austria. The center-left candidate, Alexander van der Bellen, has won with a fairly wide margin, 53.3% to 46.7%. So the center-left party won that. And then, of course, the Italian referendum came out yesterday. It was expected to be volatile, especially for those trading the BTP futures on Eurex. Treasuries were expected to be volatile on this release, especially if it had been won. The Italian referendum on the Constitution, there were some pretty deep changes that were being proposed by PM Matteo Renzi to change the Constitution for Italy to streamline some of the process for Parliament and the Senate, and he lost. The exit polls show no vote, and then later the voter turnout came out to be about 70%, and Renzi's idea was thrown out quite handily, and Renzi has promised that he would back down and he would resign if this referendum is lost, and it is. So that's another big piece there. And then other than that, we're looking at UK November services PMI came in at 55 versus 55.2 versus 54, which is fairly strong. Looking at today's calendar, we're expecting this morning, we're expecting US services PMI final for November, expecting 54.9. That comes out at 9:45 Eastern. Labor market conditions index change. This number does not have a consensus estimate, and it's not a market mover, but that's expected at 10 o'clock Eastern, and an ISM non-manufacturing also expected at 10 o'clock. This morning we had comments from Fed's Dudley, which I posted on Twitter, but also at 9:25 Eastern we have Fed Speaker Evans. A non-voting dove speaks on the economy and policy in Chicago. At noon, we have BOE Speaker Carney, and then at 2:05, we have Fed Speaker Bullard. So mostly today, the U.S. Services PMI, then the ISM non-manufacturing, and then after that, it's Fed speakers or ECB speakers or BOE speakers. It's Monday, so let's look at the week ahead and what we've got in play. Tomorrow, we get German factory orders, construction PMI. We also get the Eurozone GDP. We get U.S. trade balance, durable goods, and factory orders. We also on Wednesday get German industrial production, UK industrial production and manufacturing production, and U.S. consumer credit. On Wednesday, we also get the rate decision by the Bank of Canada. On Thursday, we get the ECB decision, which is going to be important. The outcome of the Italian referendum puts pressure on the ECB, and so it'll be interesting to see what Draghi says on that. And then on Friday, we get the German current account, trade balance, and labor costs, UK trade balance, construction output, GFK inflation, and the Bank of England announcement, as well as ECB speakers. So that's what we have for the week. Nothing major on the US side, at least not that I know of yet. But who knows? The news flow has been impacting the market a fair amount. Let's switch gears now and look at trading. So for Friday, the primary expectation is that we break the downtrend we've had for a couple days, Wednesday and Thursday, and for us to go sideways and potentially push up. The main idea on Friday was for us to push up into the high volume node from the upper distribution. So what we had on Thursday is we had one distribution up top, a second distribution down below, and then we had the overnight high dividing them to at 2192. And the expectation is, as you see here in this yellow line, the expectation is that we're likely to test that. And we did. We pushed right up to it in the morning, dropped down to about 87, and then traded sideways. So Friday's plan was Friday played out hypo 1. Not exactly, but it did stay within range and went sideways, tested the upper distribution, and sat there for the rest of the session. Secondary hypothesis, the expectation was to push up towards the upper hypo and then fail, rotate down, and move lower than Thursday's low, continuing the one-time framing up. Again, the one-time framing down means lower or equal highs. So we've had lower and equal highs for the last couple of days, and the expectation is to continue that. That did not happen. Here's what actually happened. Pretty tight market. We had non-farm payrolls, which had a terrible range. And by the way, I went back in time and looked at how non-farm payroll Mondays um, played out. The one that's most volatile was the one on November 2nd, but that Monday was Labor Day. We went right into Tuesday. That the Tuesday after the non-farm payrolls for September had 13 and a half points. The number itself traded about a 20-point range. So that carried over into Tuesday at 13 and a half points. On October 7th, the non-farm payrolls traded from 2161 half to 2149.75. It's about 12 points of range. And then the following Monday, it traded a measly 7 points. 7 points for October. On the November non-farm payrolls, which was on the 4th of November, it traded about 7 points during the release, but then the Monday traded 22 points, 22 points on the high side. It went into a trend up, but I want to remind you that that was the Monday before the U.S. election, which was Tuesday the 8th. So this was Monday the 7th, 22 points. In general, on a study that I did a while ago, the Mondays after non-farm payrolls are very sluggish in general. They generally trade on the lower end of the acceptable or the standard range. So I'm expecting 10 points or less today, but we'll see. We'll see how it plays out. So today is expected to be fairly choppy, so just pay attention to that. On Friday, we put in an opening swing from 2189 and a quarter, 2194.75, and then we broke it by a little bit, fell back in. So you could see that on Friday, the short time frame traders are in control, and they're just not able to push very far. So we finally got the test of the upper HVN, and then we fell right back through the 2192 92 even LVN retested and dropped below to 2187. So we stayed inside of Thursday's range. The Thursday range high is there. The Thursday range low is there, and we stayed right in the middle of it. Fairly balanced profile. The market just did not have anything to price in. Most of the upper time frame participants were not in there on Friday. Volume was pretty light. So for today, what am I looking at? Let's see. So last night we had a pretty decent movement. We traded from 2179 to 2205, so about 25 points overnight. That's on the high side, and overall, the market is opening in a gap up, a small gap up. We have a small gap zone beneath us. If we stay up here, the point of control overnight is 2200, and we're trading what looks like a pullback. So we have an impulse, a slight pullback, and this looks like it's likely to push the overnight high. And so overall, this looks bullish to me. So the expectation this morning, if we follow the normal pattern, then we're looking for an open auction. We're looking for a drop down into the prior day's range. And then I'm expecting it to rotate back up and start moving towards the 2205.75. That's the primary hypothesis. The key price to test above from here is probably a little far, 16 points for a Monday. It's up here at the 2213, the high we put in a couple days ago. If I extend this this composite forward, you can see there's not much we can glean from extending it out. There's not much we could do here. We are right in the MC point of control, 2200, and that's where I expect us to get stuck today. So I'm not expecting too much range, probably around 10 points or so. That's the primary hypothesis. The secondary hypothesis is the gap stays open. We get very bullish. We break that overnight high and push immediately up to that 2213, 2211 to 2213 area. That's hypo 2. Okay, so that's those are the plans for today. Hopefully, you've created your own and are ready to follow them. Just wait for the market to set up. Let's see who's in control before we decide to step in and stake our money to find out if the market's in agreement with us. Good luck today. A reminder, the webinar that was scheduled for tomorrow, which is about scalping using order flow, was moved to next Tuesday for a good reason. In the description of this video, there's a link to register. Please register if you'd like to get the recording. Even if you're not attending, register so that the recording can be sent to you when it's made available. We're going to cover quite a bit during that webinar. It's a convergence event for next Tuesday at 4:30 Eastern. I'll catch you then. Take care.